Welcome to the VRIC Media Channel, where we talk about making money in the mining and metal sector. My name is Jay Martin, and my guest today is John Florek, a veteran geologist who's worked on some of the best-known projects in the mining business, like Barrick's Hemlo mine. He was the senior geologist, Placer Dome, and the Detour mine, which is now owned by Agnico Eagle, where back in 2016, John was already leveraging artificial intelligence technology to accelerate work on that project. And he took what he learned in 2016 with Detour and since then, and is applying that to his present day company, where he says the AI systems he's implemented are getting the work done of what would normally take 10 to 12 geologists and accelerating his timeline to get models built by a factor of 3x. So it's interesting because we've all been waiting for new innovation to hit the junior mining sector, and it's beginning to now. And today's interview is a great example of exactly how. So John Florek is the president and CEO of Emperor Metals, and I think you're going to enjoy this interview. Here he is.
This is Jay Martin.
All right, here I am with John Florek, the president and CEO of Emperor Metals. John, it's great to see you again.
Yeah, you too, Jay. How you doing?
I'm really good. And I'm excited to jump into this with you today. There's a few different directions I want to go. So we're just going to pick our topics as they come. But first off, I got to get your take, because you've been in the business, the gold mining business, for like 30 plus years and worked on some projects that everybody knows, like the Hemlo mine, for example. You worked at Placer Dome, Kirkland Lake's Detour mine. You've been in the trenches on some very big projects through some cycles, right? Like you've been in this business through ups and downs. And it's a frustrating time for a lot of retail gold investors because they've been so patient. The macro forces are telling everybody, like, gold's time is now. The gold price is telling everybody gold's time is now. The equities aren't doing much, but you've been through it. So I imagine you've seen this story before and you got a pretty interesting perspective on it. So you're in the CEO seat now. What's your take on market sentiment in the gold sector at present?
Well, yeah, I mean, it's really interesting because it is cyclical. It's a boom and bust industry. And I guess, we had in the lexicon in the past where, he's sitting on a gold mine. And we're sitting on potential gold mines right now, but no one's paying attention, right? Stocks are low, gold price is high. But I'm really encouraged. Gold is at $2,300. And when quarter two earnings come out, all these companies operating, producing gold, they're going to have, exceeds expectations in the Q2 financials. So I'm really excited about that because I know that's going to ripple down to the junior space. So I really think that, this is a great time to get into some of these juniors, because gold price have been going up, and the juniors, or the explorers, which you're going to need more inventory, quite clearly, because central banks are accumulating gold at their most rapid pace since 50 years ago. So I'm really excited about what this industry is going to look like after Q2 earnings in the gold space.
Yeah, that's an interesting take. So Q2 earnings in the gold space, because then we're going to see financials that reflect the higher margins on the back. And there's a lot of institutions that are going to be waiting for that to make a formal decision on how they allocate capital. That's an interesting watershed moment, or potential watershed moment, that I haven't chatted about a lot. I like that.
Yeah, and you look at the NASDAQ, it's probably going to stall. And so these guys are going to be looking for other stories that companies are making record profits. And It wouldn't be too hard to just look over to the gold space.
No, it wouldn't be. And, traditionally, you mentioned the central banks, and 50-year records, quarter after quarter, year after year now. And a lot of this is attributed to BRICS nations looking for, alternatives to the dollar on the margin. But it's not just. Singapore was leading gold acquisitions for 2 quarters in a row last year. And a lot of friendly nations, but it's where you go if you don't know what's around the corner. And we live in a pretty uncertain time. And so central banks, I don't think they're de-dollarizing as much as they're just buying insurance. That's what physical gold is, right? It's the insurance policy if you don't know what boogeyman is maybe around the corner.
Absolutely. Even Western adversaries, they're accumulating gold because they don't want to be tied to the greenback. So you have that dynamic on top of it as well. So yeah, it'll be an interesting future for gold, I think.
So I want to ask you, why you made the jump from, senior geologist at many world-renowned projects into the CEO chair. Like what caught your attention? What inspired you to make that change, John?
Well, I've been dabbling in the junior space since 2010 too, but I made the jump because, I helped companies make a lot of money, and I wanted to, like you said, at 35 years experience, I really wanted to do something more significant. And I felt with my experience, I could leverage that into a junior company with some discoveries and or bring things into production. And so I was looking for a flagship property with Alex Horsley. Back up a little bit. I wasn't initially the founder of this company. I was probably the largest shareholder of this company, supporting Alex Horsley's company there. And basically, we ran across this asset. So I looked at it geologically for him, and we'll get into the story a little bit more, but I used artificial intelligence because I was using that up at Detour Lake Mine when I was chief geologist up there. And basically I leveraged those skill sets into quickly evaluate and, overlook deposits. And this flagship property that we have right now, Duqesne West, we used AI to evaluate it in record time, like within a month. I presented to the board of directors, showed them the opportunity. They agreed that it's something that we should pursue. And then subsequently asked me if I would be president and CEO. So that's how I kind of came into this position.
Okay, so you mentioned the project, the Duquesne West Gold Project. You're in an area called the Southern Abitibi in Quebec. And for any mining investor, you're familiar with this region because this is the region within Canada that has produced 90% of our country's gold ounces. If you're not familiar, now you are. So walk my audience through a bit of the background there, John, and why regions matter in this business.
Yeah, this is a tier 1 district. We have multiple mills around this property. I think within 45 minutes, you can probably come to 6 or something different head frames and tailings dams. So, it's a very simple story, Jay, this project, because, we picked this up, introducing this as a high-grade underground gold mine potential. And with our 2023 drilling, just was last year, we quickly realized that we were potentially sitting on top of this large-scale open pit above this high-grade gold mine, because no one ever sampled the host rock before. And so when you look at this district, I guess the mines that are these low-grade bulk tonnage open pit deposits were never really evaluated appropriately in this district. It wasn't until Canadian Malartic, Detour Lake Gold, now Cote Lake, where people are seeing, oh my God, you could mine these large-scale open pit deposits in the Abitibi. So, location is everything in this district. We are located where potentially we wouldn't have to build a mill, where we wouldn't have to build a tailings dam. And think of if we look at projects, right? You've been doing this for quite a long time. All these projects, they have runaway CapEx expenditures. I don't know, Cote doubled their price or something like that for bringing that into production. So if you have this high-grade asset with a large-scale open pit with mills around, and you don't have to build that infrastructure, you could probably, save $500 million to $1 billion in CapEx expenditures, and you won't have those cost overruns on a project like this. And so we're quite excited to leverage, the synergies in the district. If it's not us building it and somebody else sees the opportunity to feed their mills, then there's no reason for them to build or duplicate their infrastructure, right?
Mm-hmm. Yeah, and the proximity. So you mentioned a few, but in the Abitibi Greenstone, you got Pan American, you got Agnico Eagle, you got Newmont, right? And I know one of your very significant shareholders is Rob McEwen, who founded Goldcorp, merged with Newmont, creating the world's biggest gold producer, biggest transaction in the gold sector at that time. El Dorado, McEwen Mining, of course. I want to get to maybe the vision there, because when I think about proximity to so many majors, I think about the exit strategy, and I wonder if you think about that too. But before we get to that, let's talk about the resource. So, what have you found at Duquesne West, and what's the asset within Emperor right now?
Yeah, so right now it has a historical mineral resource of 727,000 ounces of gold, average grade of 5.42 grams per ton. You know what was really exciting about this, Jay, is that it had about an average thickness of 5.7 meters. Very good alteration in the rocks, and that's good because it identifies that there's a robust system right beneath us. So that was really, really exciting. And so that's what it, initially looks like. But you have to also remember that was calculated using $960 gold price. Gold's at $2,300 now. I mean, basically this deposit, if we did no drilling in 2023, before we picked up this property, this deposit sat idle for about 12 years. And if we actually didn't do any more drilling on this property, the in-ground value grew by like $1 billion. So that's significant. And that's with no work that would have been done. So we're drilling, we're adding, we're expanding the deposit internally and externally with ounces. We're tackling the open pit concept in 2024. More significantly, last year was extending these plunge lines of the high grade mineralization, and we did that successfully. We hit 13 out of 14 holes, multiple zones. There's like 8 different zones. That's what gives us the width to have this potential open pit gold deposit. And more importantly, no one's ever sampled the host rock in the area. So no one cared about, back in the day, the Abitibi in this region was considered high-grade underground gold deposits only. No one ever really thought about building large-scale open pits because nobody cared at $250 gold. No one really cared about sub-gram material, 1 gram per ton. But now at 2,300, the economics change. Conventions have to be broken. We have to start looking at things from more of an economic and profitability standpoint and what we can do. I mean, you look at Detour Lake Gold. I mean, it was a struggling asset. I mean, they had to go it alone to build and construct it. The Barracks of the world didn't want to come in. But look at the vision that they had. When I arrived in 2016, we rebuilt a new model. And basically, the foundational concepts of this AI that I'm using with this company, we started pushing 20% more gold through the mill. And at the time, that was $150 million of extra revenue per year for life of mine. It's like a 40-year mine life. So that was huge. And that's why, Kirkland Lake saw the opportunity for Detour Lake Gold, and they took us out. And then subsequently, Agnico Eagle saw the generational mine that this would become, and they took out all of Kirkland Lake with their other assets like Macassa. So that was a huge win. And if you look at the $150 million, that was $1,100 gold. Now, if it's at 2,300, that's like 300. That 20% is now like $325 million per year for life of mine of extra with these models that I've been using, to help give that the profitability to Detour Lake Gold. So I'm using that same technology in Emperor Metals. One can say that Emperor Metals' birth was in AI.
Yeah, that's really interesting. And you mentioned that like the foundation was built in 2016 when you arrived at Detour. Could you just get a bit more granular for me? Because AI is a term that is thrown around in every second sentence right now. Most people outside of maybe ChatGPT don't have any experience utilizing the technology. So as simply as you can put it for my audience today, what is the advantage that AI is giving exploration companies, and how has that helped you produce results?
Yeah. Okay. So I'll break it down. Have the little term AI squared. So the 2 I's are improve and impact, and the A is accelerate. So improve productivity. So it's huge because it could do the work of like 10 or 12 different geologists. So that's why I love it.
Right there. Yeah.
It accelerates the decision making. Like when we picked up this property, we were able to make a decision within a month. The models that we built would have taken years to evaluate something like this so quickly. So we had some really detailed models. It really accelerated our decision making skills. And also it does have an impact on the bottom line for the business. So that third, second I is impact. impacts, especially when you have day traders now. You have to make decisions quickly. They want to see progress quick. AI is a tool that basically helps move a project along more quickly. So within a year, we built the first mineralized model. We built the first geological model. Sometimes that takes years for companies to build. Okay, and then now in 2023, we built the first conceptual model of a big open pit above this high-grade underground gold deposit. We did all that in less than a year. So I think sometimes that we're undervalued because we push the narrative quickly. Sometimes these companies to do this narrative that we've done takes 3 years, and the story gets out there and their stock gains strength. But we're moving so quickly, and we're probably pushing the story a little bit too quick for the market to digest. And I think we're highly undervalued right now.
Okay. Well, good news for any prospective shareholders. And I like how you put that. We're able to do the work of 10 to 12 geologists. I mean, that's like anybody can understand that. That's how I use AI in my business, to be honest. Like, it's become my full-time researcher and admin, and even playing a controller role within my business because of the ability to analyze financial data so quickly. And you're accelerating your modeling to the tune of like 3x, it sounds like.
Absolutely.
Yeah.
And as your brother said, he says it's like power tools on steroids.
Yes. I love it. In the hands of 10 or 12 geos. Okay. So very curious about your relationship with Rob McEwen. He took down nearly half of your recent financing, one of the biggest names in the mining business. This should turn heads. Walk me through the genesis of that relationship, what Rob sees in the opportunity that got him that excited.
Yeah, Rob McEwen, Alex Horsley, my IR corporate development partner here. He reached out to Rob McEwen. We scored a meeting with him. He really liked what we were doing. He saw the growth potential of our deposit because McEwen Mining is just down the way from us, right? He's about 45 minutes away by main highway. And so he has McEwen Mining. It's an underground mine right now. But he saw, the growth potential that we had. He saw the success that we had in our 2023 drilling. We were hitting like 10.8 meters of 15.8 grams per ton. And then he saw that we have this large scale potential for open pit where we had like 25 meters of 1.69 grams per ton. That's in the host rock that never was sampled. So he said, we like what you're doing here. We like the vision that you bring into the district. And so we had this aligned vision. And so he liked the way we were using AI as well, because I guess he's big into technology. And so he wanted to take part and participate as being an owner of this company.
That makes sense. He was hosting that innovation awards in PDAC every year. I don't know if he still does that, but it was like technology breakthroughs inside the mining business at the PDAC. I forgot about that. Yeah, of course.
And it's interesting because I submitted this deposit in for a global challenge, global map tech challenge, and we got third place on this deposit.
I didn't realize that he came in cold. When you see a significant shareholder with that platform like McEwen come in and take a big piece, you kind of make the assumption there's some history, relationships, and previous experience at a different company. I didn't realize you guys set up a cold meeting, pitched in the deal, and he jumped at it just like that. It's far more impressive, to be honest with you.
What's interesting, even when I was talking to him, I said, well, Rob, I remember I was up with Placer Dome up in Red Lake when he got his big score, right? And, Placer had the opportunity to buy that mine, but they turned it down and stuff like that. So he goes, oh, you're an old Placer guy. You're a competitor. So now he's funding or helping to build this company. And I'm, historically a competitor of his. So it was a funny joke.
I love that. Okay. Walk me through 2024 catalysts. If anyone is like just tuned into the Emperor Metal story, they're curious, what can they expect? Every retail investor has the same question. What's going to make the share price go up? So, in terms of news flow, 6 months inside the next 12 months, John, what can prospective shareholders expect to see from Emperor Metals from a news flow standpoint?
Yeah, so we got 16,000 meters of core that will be assaying. That's huge. And we're going to all do that for the low price of $3 million. So it'll be all in cost is going to be about, under $200 a meter. 8,000 of those meters will be from drilling, and the other 8,000 meters is coming from the historical core library, assaying the host rock of these high grade lenses. So we got quite a bit of news flow coming. And so we just moved to hole 5 actually today. We just started spinning. So we drilled about 1,500 to 2,000 meters so far. And we're on hole 5. Now, hole 5, we just moved a kilometer away from our ultimate pit limits. There's some mineralization out there. So we're going to try to see what that looks like and how it can connect. So we have the ability to potentially expand this open pit. Currently, the open pit is 1.8 kilometers by 800 meters wide by down to 400 meters. So we think that maybe we can even grow, the 1.8 kilometer dimension further east and potentially west. So a lot of the 2024 drilling is focused on the open pit. About 20% will tackle some of the high grade underground gold. Those are a little bit more sexy than some of the low grade bulk tonnage stuff. But more importantly, Jay, what this does is it helps us add ounces more quickly. Because now we have a big open pit. We can mine in order of magnitude less grade. So underground might be 3 grams per ton. Open pit, you can mine 0.3 grams per ton. So all that gold was unaccounted for in historical models. There was never a 3D model. I looked at, since we built this 3D model, one can almost envision that 40% of the holes are within, in fact, if you do the calculations, are within 30 meters of each other. So that would almost be an indicated category. But what we're going to plan on doing in Q1 of 2025, we're going to do an updated mineral resource. So the reason is I wanted to make sure that I got 2023 drilling and 2024, because I wanted to go back to those historical core library, sample that host rock, because those are adding incremental ounces that lower strip ratios for an open pit concept and improves profitabilities, as well as try to put some infill in so we can build these inferred ounces. So we're quite excited to have our own, published mineral resource update, probably start the report in Q4. Hopefully in Q1 of 2025, it should be done.
So drills are spinning right now, 1,500, 2,000 meters behind you this year on hole 5 right now. 16,000 meters of core to be assayed. So that's in the new pipeline. All of that contributing to ideally Q1 of 2025, the updated mineral resource to be put out, which gets me back to a question I almost asked about 10 minutes ago. The grander vision for the company, right? You're surrounded by a lot of majors and you're in a region where they are comfortable making acquisitions, proven. Is your mission as simple right now as just like, let's increase the ounce count and get on these radars and then see what happens? Or talk to me about that.
Yeah, I'm building inferred ounces right now. That's my main task. And the way I see, even if I wanted to build it, which would be fun, I'm probably not going to get around to doing it because there's so much synergies in this area, somebody will probably take us out. And so, VRIC just made a re-entry into the district as well. I don't know if you're aware of it. So they're in the district. So that's exciting. The majors are coming back. VRIC left in 2008. Their main office used to be over Canadian Malartic. Now when they left, they said they were looking for open pits. So they went to Nevada. They went to, Pakistan or down to Argentina or wherever. And looking for large scale open pits. Now they came back to the district looking for open pits because Malartic, Detour Lake, Cote Lake, they've proven that you can mine large scale open pits successfully here. So it's definitely a potential takeover target because there's just so much synergy. Like you said, there's over 200 million ounces that have been produced in this tier 1 district. We're right along trend. So it's just a no-brainer.
I like that. That should be the mission statement. Emperor Metals. It's a no-brainer. Okay, look, John, pleasure chatting with you, as always. Thanks for coming back on the show. Sounds like we should probably have you back on to get caught up on the progress, maybe Absolutely. 6 months down the road, and find out how the year is panning out. But I appreciate your time today, and I look forward to doing this again.
Okay, thank you, Jay.
All right.